Talk to the traders out there that are trying to find a strategy or style that actually can slow them down and become better executors the way that you've done.
So, I'll start off by saying that as a beginner trader, you do need to slow down your thinking process as you approach a trade, as you look to enter a trade, and then as you're in a trade. And it's helpful to do this because if you are applying a approach or setup or a time frame that doesn't give you the time to properly think out the scenarios of looking for an entry or waiting for an exit, then you are going to find yourself trading in and out in an area where if you just had put on your trade and left it there, you probably would have found a profitable trade. But it is the lack of time in your thinking process that you cut yourself off from really seeing that trade play out. And we see this, we're saying, oh, I took profits too early. Oh, I thought it was going to reverse, so I cut it. You're trading against yourself when technically nothing has happened, right? It's pretty much in the same thing. The other thing I would say is that you want to look at the larger time frames to help you identify the trend structure. So something that I share this a lot with people is you want to start off with it's three main pillars, my approach. It's the environment, the trend structure, and then the setup that you use. The environment will tell you what buyers are in control, whether buyers or sellers, like that box range. Okay. If we're consistently above the 50% of the box range that we've been consolidating, like 2 3 weeks ago, right? It started in July. We were in like a 2 or 3 week range in ES and NQ. If we're consistently at the top of that range, you know that the buyers are in control. So the environment is telling you that it's bullish. We now need to see the what I call a bull bear zone, right? Which is the zone in the middle of that consolidation that separates the buyers between the sellers. If we're consistently above that bull bear zone, the environment is bullish. Yes, bearish trades will work, but understand that those are mean reversion trades in a bullish environment. The second part of this is the trend structure. If you go to a middle time frame, for me, for example, I love the hourly. I like to call myself, even though I execute on the 5 minute in futures, I like to call myself an hourly trader because I look to participate in the hourly trend. And I just use the 5 minute to help me identify the setup that allows me to manage my risk. So if the environment is bullish, I then go to the hourly and I say, okay, what is the hourly trend structure like? Is it I've now come to understand a specific structure around the 9MA. It helps me define whether we're in an uptrend or in a downtrend. Then through that trend structure, I say, okay, if we're in an hourly 9MA uptrend, I know that on the smallest time frame, on the 1 and 5 minute, we are going to be in an uptrend. If we're above, right, a hourly move higher, we're above a rising 9MA, technically, like in a daily time frame, we're in an uptrend. So my execution on the 5 minutes now is where I apply the setup. What setup do I need to apply to participate in that hourly time frame? Well, I have two setups. I have a reversal setup or I have a directional setup. Both are boxes. The box allows me to manage my risk, is where I know where this is where the systematic approach enters, where I have a fixed entry. I know where my entries will be at all times. I know where my stop will be at all times. I know how I will trail my long or short at all times. And I know what my position size will be at all times. It's percentage based. So if I'm trading ES and there's a 10-point range from between the entry and the stop, my size will be half of my normal size. If it's a 5 or 6 point spread on the trade, then I'll have a full size trade. So in doing a top to bottom approach, identifying the environment, identifying the trend structure, and identifying the setup that will allow you to participate in the trend that is benefiting from a bullish environment, you will often find yourself eventually participating in more trend on a 5 minute or even 1 minute if you're trading that on a 5 minute time frame that will sort of allow you or allow the market to do the heavy lifting for you. At that point, you align yourself with the trend, you align yourself with the bullish environment, and you don't find yourself shorting a setup that maybe looks favorable. And for some, the shorting setup may be, their A+ setup. But if you're a newer trader and you're consistently shorting as price climbs higher in a hourly 90-MA trend fashion, then you're going to be looking to risk one and maybe make half of that, right? When if you look for a directional setup, in a uptrend while we're in a bullish environment, you're going to be risking one and potentially make 4 or 5 times your money in a consistent manner, right? So I think in giving yourself that freedom of thinking and processing the environment, then processing the trend structure on a 1 hour, 30 minute, maybe 4 hour time frame, and then using the 5 minutes to say, okay, we're in an overall uptrend. The trend structure is aligned with that. I will execute on a 5 minute setup. And so as you develop this strategy and this approach, write down the outcome. Was it a profitable trade or not? And continue building on that. But I think leaning on a trend structure and environment will allow new traders to successfully close the learning gap.